This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report.
This is the Forex Report on a Friday. Jack Lott on the James Dix Financial Network. Well, we've seen a very difficult week of trading as currencies just can't seem to get a hold of a direction. Every time we saw the dollar start to gain some upside momentum, it would stop dead in its tracks and reverse itself. We're used to this, of course, with the dollar in a 5-year downtrend. However, attempts to sell the dollar off beyond key support levels were also met with strong opposition. The barriers on either side of the market were incredibly resilient. The economic calendar was on the light side, with only a few important indicators from the U.S. and other G7 economies. U.S. data was mostly supportive, although there was nothing too promising. Today's numbers look like they should be dollar positive at face value, but digging deeper into them told a different story. Strong retail sales numbers were comprised of big increases in spending on food and energy, leaving only a little left over for discretionary spending. On the technical front, the greenback is still in serious trouble. Even with many majors looking exhausted, we noted that above that dollar, bears were quick to cap gains as the currency attempted to recover. The intraday charts are an absolute mess on most pairs, which can be great for very active traders, but makes trading for the rest of the market a real pain. The only other currency facing a ton of selling pressure has been the yen. With the Dow reaching a new high and global economy still looking healthy, traders have been open to higher risk. However, we saw a late-day sell-off in stocks yesterday that shaved 150 points off some of the yen crosses in just an hour or two. Traders should be aware and watchful of this correlation when trading the yen cross pairs, as stocks still look very top-heavy and ready for a correction. Well, the big picture is there are two primary subjects on our mind in the big picture: interest rates and the upcoming G7 meeting. As far as we're concerned, the Fed has absolutely no room or reason to lower interest rates again at the end of this month. Stocks have benefited greatly from the September cut, and confidence also got a shot in the arm. Yet, long-term yields have not fallen, but rather have risen. This means that mortgages and housing have received zero relief from that ease. More importantly, another cut would literally send the greenback spiraling lower. A weaker dollar leaves the door open to higher inflation and would be counterproductive. In short, an October cut from the Fed would be the worst move of Bernanke's career. However, stocks and Fed funds futures obviously haven't gotten the memo. Fed funds still show a 35% chance of a cut on October 31st and 90% odds of a cut by December. Stocks are obviously looking for another cut within the Dow at a new record yesterday. Additionally, Forex traders have built very dovish expectations into the dollar as well. We're looking for a correction in all of those trends in the near future. Our other concern is the G7 meeting coming up next weekend. We've seen foreign officials recently make subtle remarks to the U.S. that we need to help our currency from free-falling. We could see more of this pressure at the meeting, leaving Forex traders hesitant to take the dollar a leg lower next week. In this week's FOMC minutes release, we did see the Fed note its concern about a significant decline in the dollar leading to inflation, which is another sign that it may be growing uncomfortable with the fall and not ready to seal the buck's fate with a rate cut. And that's the Forex Report on this Friday. I'm Jack Lott. Have a great weekend. This is the James Dix Financial Network.